Hello there, my name is CMA Panktiveni. Welcome back to CMA modules. In this video lecture, we will be recording accounting for consignment. We have already recorded a video lecture wherein we have covered what is consignment, parties to consignment, and other theory content related to consignment chapter. In this video lecture, we will be covering what is accounting for consignment and journal entries related to consignment. So accounting for consignment, a related transaction, is done in the books of both consignor and consignee. These are discussed as follows. Books of consignor. The accounts maintained in the books of consignor are consignment account, goods sent on consignment account, consignee's account, consignment stock account, consignment debtors account. We have books of consignor. The accounts maintained in the books of consignor are consignment account. It is profit determining account of the consignment business. In this account, the expenses and losses are matched against the revenue from such business. This profit or loss on consignment determined in this account is transferred from this account to P&L account. So we have consignment account. So what is consignment account? It is a profit determining account of consignment basis. So it is a general P&L account. All your expenses and income are transferred to this account. So one account you'll prepare for consignor or consignee, and the opposite account you'll prepare for consignment account. So suppose goods sent to consignment, the other part of the double entry aspect will be consignment account. For all transactions, the second part, or for many transactions, the second part of double entry aspect will be consignment account. Goods sent on consignment account, it records goods that are sent on consignment and also returns from consignee. If any, consignee's account, this is a personal account that records the transactions that are entered into by the consignee for the consignment. This account shows money due to be received from the consignee at the end of the period. So we have goods sent on consignment, it records goods that are sent on consignment and also returns from consignee. Then we have consignee's account. So what is consignee's account? This is personal account that records transactions that are entered into by consignee for the consignment. So consignee's account is nothing but this is a personal account that records transactions that are entered into by the consignee for the consignment. So that's consignee account. Consignee, suppose agent's commission, del creditor commission, sale done by agent, such type of transactions will be reflected here. Consignment stock account, that is unsold items, closing stock will be shown here. Consignment debtors account. Then we have books of consignee, consignor account, commission account, and consignment debtors account. So accounts which are maintained in the books of consignee are consignor's account, commission account, and consignment debtors account. Consignor account, this account records transactions that are entered into by the consignee in relation to the consignment. Commission account, separate commission accounts are required to be maintained for different types. So here we are just understanding, मोटा मोटा यहाँ पे समझ रहे हैं. Journal entries will help us to understand more. So if you see, you will have one consignment account. Here you will have one consignor account, consignee account, consignment inward account, commission account, consignment debtors account, inward account. They are optional accounts if question requires. Otherwise, consignment account, consignee account, consignor account, they are compulsory accounts. Without those accounts, you cannot complete your sum. Let us have a look towards journal entries. So opening stock on consignment. So opening stock, your stock will always be at cost price or invoice price, be it closing stock, be it opening stock, or be it purchase. Okay, so your purchase, your goods sent on consignment, opening stock, closing stock. So if it is at cost or if it is at invoice price, you have to convert. Based on question, you'll have to convert, and your entry will be same. Okay, consignment account to consignment stock account. And if you have at invoice price, you'll have to go for loading entry also, that is stock reserved to consignment. That loading part, I'll show you the calculation. You'll have to stuff here stock reserved to consignment. Then you have goods sent on consignment at cost so goods are going from you. So goods sent on consignment account debit to goods sent on consignment. Then you have if it is at invoice price, you have the loading part. Then you have cancellation. Okay, cancellation of goods, say of loading on goods sent on consignment. Okay, advance received from consignee by consigner. So bank account, you are getting something in advance. So either bank account or bills receivable account to consignee. See, opening stock, goods sent on consignment. Consignee will not have anything, any entry till now. Only consigner is recording. Now, when advance is received from consignee, at that time he will record that I have sent money or I have sent bills payable to the consigner. So credit what goes out. Okay, so to bank or bills payable, consigner account debit to bank or bills payable, bank account or bills receivable account debit to consignee. Then we have discounting of bills receivable by consigner, bank account debit, discount on bill account to bills receivable account. Okay, discounting of, suppose if I discount, consignee will not come to know what I'm doing with that money, that bill. Expenses incurred by consigner. Consigner is incurring expenses. Then at that time there will be no entry in books of consignee. Consigner is sending goods in transit, whether at cost price or wherever goods will come, cost or invoice price calculation will come. So there will be no entry again for consignee. Now cancellation of load on goods in transit. Okay, expenses paid by consignee. So whatever he is paying to bank account, that cash or bank is going, that amount he is collecting from the consigner. So here consigner is debiting that amount, that expenses, to the consignment account. Okay, that's consignment account is nothing but a general P&L account. It is like a ledger account. It is P&L type of account. Then you have sales done. So for cash, consignee account debit to consignment account. For credit, del credit commission provided, del credit commission not provided. Del credit commission provided, consignee account debit to consignment account. Del credit commission not provided, consignment debtor account to consignment account. And see, here you are providing, so whatever commission you are providing, that commission debit the receiver who is receiving consignee. What you are providing, commission. Commission is going out from you. Then you have del credit consignee account debit to consignment account. You have del credit commission. So del credit commission is consignee account debit to consignment. Again, consignee debit the receiver. Commission is going out from you. Consignment debtor account debit. So commission is again going out from you, and you are not providing depreciation yet. So consignee has not received, that's why you have made it as payable. Okay, payable. So same thing, if consignee is receiving commission, you'll record debit what comes in. So bank is coming, credit the giver. Okay, credit G, always credit G. Then consignment debtors account debit to consigner account. For credit, del credit commission provided. Okay, provided. Who is providing, that they have recorded here. Then commission payable by consigner to consignee. So who is paying? Debit commission is coming in, we are paying it to consignee. It is payable, we have not paid yet. Amount received from consignment debtors. So whatever amount you are receiving from the sale, that sale amount you are recording here. Bad debt in connection to consignment business, that bad debt amount you are recording here. Bad debt is your debt expense. So bad debt, debit all expenses and losses that you are recording. Then you have goods returned by consignee. So goods returned by consignee you are recording here. Okay, at cost, at invoice price. Abnormal loss of goods in transit or consignee's place, that you are recording here. So you have an abnormal loss. So abnormal loss, debit all expenses and losses. So if you see, opposite part is nothing. The other aspect of your transaction is consignment. Okay, other aspect of your transaction is consignment. If you have an insurance claim received, that also bank account, insurance claim account, consignee account to P&L account, debit or loss. Suppose if it is profit or loss, you have to adjust that, and you have to the other aspect will be abnormal loss. Okay. Closing stock on consignment. Closing stock will be consignment stock account debit to consignment account if goods were sent at cost. If goods are sent at invoice price, so again same entry, but loading portion will come. Okay, so we are done with this. If there is any profit or loss, then from consignment. So you will close all other accounts first, and then you will close consignment account, and then that consignment profit or loss will take it to your P&L account. Okay, so that P&L account transfer entry is done. Final remittance received by consigner from consignee. Okay. So final remittance, you are getting some bank amount, money from the consignee. Debit what comes in, credit the giver. Credit what goes out, bank is going out or bills payable. Debit the receiver, consignor is receiving it. I hope you are comfortable with the journal entries and the accounts part. From next video lecture, we'll go for illustration number 8. Thank you.